Good afternoon, everyone. A little bit of a quiet day in the markets. We did see those U.S. markets move higher with the exception of the Russell 2000. Those small cap companies continue to be under a little bit of pressure. And the TSX fared a little bit lower today, down by 0.2%. But it was really about Merger Monday. So we'll start there and then get into a little bit more detail in terms of the broader North American equity markets. We had news, of course, that CP Rail is buying Kansas City Southern, KSU is the ticker there, for $275 per share. It's basically a 23% premium to KSU's closing price on Friday. It's a $29 billion deal. And perhaps so importantly, it's actually North America's first Continental railway. So hopefully a lot of synergies as it relates to the North America economy, connecting Canada, the United States, and Mexico. Headquarters, importantly as well, will be in Calgary. Away from that, when we think about the TSX, we'll just continue on down the TSX side today. We did see some weakness in healthcare, energy, as well as industrials. Healthcare weighed down by some of the cannabis companies. They were down by about 2 to 4%. Energy also pulled back a little bit today. So maybe, again, just some profit taking in the energy sector, given the fact that we've had such a strong run in the price of WTI and also the Canadian stocks. Industrials weighed down by CP. So when you see a large deal, often the acquirer will trade lower. So CP traded down to the tune of 5.4%. KSU, as I mentioned, up on the day, of course, by about 11%, with that 23% premium being offered to the previous closing day's price. Away from that, when we also look at the Canadian market, we actually saw some strength in the real estate sector here and also tech shares. Real estate, RBC is out with a note saying that the fourth quarter trend line for real estate companies here in Canada are looking to be tracking ahead of forecasts, and that perhaps REITs are on a road to recovery. So that's one area to look at. I certainly have been investing in real estate stocks for probably about 6 or 7 months now, anticipating hopefully some type of recovery. We also saw some weakness in financial shares here in Canada, and also importantly, tech shares in Canada showed some nice strength pretty much across the board. Desjardins initiated coverage and had some buys on 11 out of the 12 stocks that they're covering. And most of those stocks were up pretty much across the board, including Real Matters. That was up by 2.7%. Importantly, they're noting that the Canadian tech names continue to trade at a discount to the U.S. tech stocks. Canadian dollar was flat to the U.S. dollar. And on a company-specific stock story front, Alimentation Couche-Tard, ATD is the ticker there. It was up by 1.4%. They did announce that they're going to be selling 49 stores to Casey's in the United States and putting another 306 up for sale. As relates to COVID-19 headlines here in Canada, we are seeing fewer cases in 80-year-olds and older. Ontario is going to be opening up vaccines to those 75 and older. And Quebec is opening it up to 60-year-olds and older. Also importantly, just on the COVID-19 front, U.S. clinical trials showed that AstraZeneca has a 79% efficacy rate for symptoms, for the symptomatic disease, and then 100% against severe hospital cases. So important to point out that this, of course, all on the back of news that we got last week, that the EU has concerns about blood clots for the AstraZeneca vaccine. Away from that, on the international front, I would just note that Bloomberg is reporting that the United States, UK, and Canada is joining the EU to impose sanctions on China over alleged human rights abuses. So watch for that rolling out tomorrow in the news lines. And then as we look at those U.S. markets, the Dow, S&P, as well as the NASDAQ moved higher. It seems as though there's some rate stabilization going on. That U.S. 10-year yield at 1.69%, so lower than pushing through that 1.7 level. So we did actually see growth outperform value today. Small cap stocks, though, however, were weak. And we also saw tech as well as REITs really performing the best. So tech was up by about 2% on average. REITs in the United States also faring well, up by about 1%. Lastly, importantly here, if you are involved in actively managed ETFs, you would know Cathie Wood and ARK Investments. She's out. Her view is to look for disruptive technology, and in particular, technology stocks that aren't going to get whipped around by that U.S. 10-year yield, which we of course know has been putting pressure on tech stocks. Well, she came out with a $3,000 price target on Tesla today by 2025. Again, $3,000 for Tesla shares. They closed at $670 today, so quite a bit of upside in just about four years time frame. I'll leave it there. Have a great night. We'll see you tomorrow.